Gold had an unusual trading session today. It is down, but it is not out. I'll explain what happened with gold and also silver in this video as we explore. Why is it unusual for gold to fall and silver to rise in the same trading session? We'll try to make sense of that question here later in the video. But first, I want to remind you, channel sponsor Summit Metals, they have these cool wallets where you can fill them up with gram bars. It's one of the most inexpensive ways to get into gold if you're on a budget, and you can track your progress by filling this thing up. So there you have it. Check them out by clicking on the link in the description below. And they have some deals out there for some of their products as well, too. Shop around and see what you can find whenever you're buying or selling to them. So gold prices, they have fallen as some follow through, some selling pressure that we had from Monday's steep losses. But the gold market bulls have clawed back about half of the losses that we saw. In fact, it's now down just $27 right now. It was down more than that earlier in the day. In fact, it got to a low of $3,886.30 here as I report to you before the markets close. It is now down just $27 or $3,955.40. So it actually has recaptured most all of those losses. Silver also lost some of today, but it is clawed up to positive territory now, up now 16 cents at $47.11 after getting to a low of $45.48 earlier in their trading session. So quite a wild ride for the precious metals, even though as of right now the prices have not moved dramatically in either sense, but gold's falling is unusual, not only because of that, but because of the dollar index. The dollar index is down, which is usually good for precious metals. Yes, indeed, a weaker dollar means higher precious metal prices. And so far, silver is reacting positively in that area, but gold is not. So serious near-term technical chart damage has been inflicted in both gold and silver to suggest near-term market tops are in place, at least for now, according to Jim Wyckoff over at Kitco. The Federal Markets Open Market Committee meeting began this morning and ends on Wednesday afternoon with a statement and press conference from Fed Chairman Powell. The FOMC is widely expected to deliver a second straight quarter-point rate cut to boost U.S. job market. Fed policymakers are divided, however, with some worrying that cutting rates will go too far and some supporting even further reductions, all amid the lack of U.S. government economic data releases during the federal government shutdown. But most believe and agree that we're going to see at least one more before the end of the year and likely yet another one in 2026 early. U.S. stock indexes are at record highs and bulls see more upside there. Equity bulls are lining up to wager that the S&P 500 will surge past 7,000 now that it looks as if a seasonal bout of volatility has passed, according to a Bloomberg report that has been released today. The index powered to a record 6,875 on Monday, buoyed by positive signs of trade, expectations for a U.S. interest rate cut, and strong corporate earnings. And that's part of the reason why gold and silver especially have been taking a hit lately. Silver, though, is showing some positive signs consolidating here. But again, it is a surprise to an extent that we're seeing gold pull back as much as it has here. It's something. And another analyst explains that the momentum of traders who entered the market too aggressively as buyers in October and have since begun unwinding positions, which has created a sharp short-term pullback in the markets for gold. And that likely very well could be the case. And, there's a lot of still political and economic uncertainty, including the continued U.S. government shutdown, expectations for Federal Reserve rate cuts, and shifting investor sentiment. For the 13th time, the Senate voted today to keep the government shut down. How much longer will this last? Will we enter into a period where this becomes the longest shutdown ever? That does play a role, even though not directly related to gold, but it does have an impact on some of the numbers that come out of the Bureau of Labor Statistics and other government organizations that do the reporting. So we'll see how that plays out. With the macro backdrop in place, bulls are pointing to other factors that can take the index past the psychologically important 7,000 level. And again, we're talking about the S&P 500, and which does relate to the precious metals. Fund flows show retail and institutional investors pouring into the market, while technical analysis shows little resistance ahead of the round number milestone. In a seasonal quirk, the current week stands out as the best for stocks ever over the past 75 years, according to Bloomberg. The rallying stock market has been bearish for safe haven gold and silver. And so, yes, indeed. So that is another factor as to why gold has fallen. But silver is up. And I think that could play a role as to why silver is up. That means that the stock market feels that the economy may not be in as bad a shape as some suggest. Now, there are multiple different facets of the economy, and there are people hurting. It's obvious. And there's other things that are, as we adjust to tariffs and other factors, it's a shifting economic situation. But overall, the stock market feels good about that, which means there's going to be more demand for goods and services that use, wait for it, silver. But that's another subject. We're talking about gold right now and why it's falling here. I think that likely, we may see more of this overbought situation for gold, and we may see more pain with gold before things get better. But that's very, very short term in my view. I think gold is going to solidify somewhere in this area, maybe a little bit lower before moving back up to $4,000 again. That's my view. More on that on a different video. But now, let's talk a little bit about the technical analysis here. The key outside markets see the dollar index a little weaker here, as we discussed earlier. Crude oil prices are down and trading around $59.75 a barrel. The yield on the benchmark 10-year U.S. Treasury note is presently at 3.978. And, lower yields there is usually good for gold and silver. Gold futures bulls' next side price objective is to produce a close above solid resistance at $4,100 again. Bears' next near-term downside price objective is pushing futures prices below the solid technical support at $3,800 an ounce. And we got to $3,886 as the low today. So we're scraping near there, or at least we did earlier in the trading session. First resistance is seen at $4,000, and then at an overnight high of $4,034.20. First support is seen at $3,900, which we're now well above that, and then at $3,850. So that's going on there. Now let's get in a little bit with silver. The silver bull's next upside price objective is closing prices above solid technical resistance at $50 an ounce. And we're a little ways off from that, obviously, but the next downside price objective is for the bears closing price below the solid support, now at $45. We were 48 cents shy of that earlier. So that's what it is. So fascinating indeed. We'll see how that all plays out. But gold is certainly a metal that, even though we see it fell today, even with a weaker dollar, it has proven itself to be the safest store of value of all the precious metals out there. Time and time again, we do not see it move as wild as silver, platinum, and palladium. But notwithstanding, I believe in all the precious metals, and for different reasons and in different ways. But gold is a metal that I've been truly more focused on since about 2017. I encourage all silver stackers to diversify into some gold. Yes, for a myriad of different reasons. Even in this market now where it's trading at prices that have been this year trading well above an all-time high, even when adjusted for inflation. I'm going to be talking more about gold in future videos and why I'm still bullish on the metal. But nonetheless, just because I'm bullish on it does not mean that it will be the case. You should always do your own due diligence and research. Even though I do mine, I could come to different conclusions than you on what's going on in the precious metals. But one thing I like to do here is give you the latest news and analysis in the world of precious metals. So if you enjoy what I do here and find it informative, insightful, and educational, I hope you will consider pressing that thumbs up button down below. It does help the algorithm, and also to subscribe to the channel if you haven't done so already. And as we watch these markets move, tomorrow is a new day. And we very well could see more pain for gold, but I don't think a whole lot more. But these opportunities arise whenever you go to make a purchase. And I almost made a purchase today, but I didn't. But nonetheless, kind of waiting some things out. You never want to buy out of fear, folks, and you don't want to buy out of any other, anything else other than your own situation and circumstance and understanding of the markets and the metal that you hold. That is crucial, folks. I believe in the physical. There's other ways to accumulate the metals, but I think the physical is the best way, in my view. But let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.